Yeah, I think that's the remarkable thing, with the stock market selling off like that, oil selling off, bond yields easing, you'd expect the dollar to be weaker. And I think the dollar showed itself yesterday to be the safe haven currency. Okay. With T-bill yields high, people have an alternative to the stock market, cash at home.
It was weird. I thought it'd be like 112 or so. I don't know. Right. And that's part of the problem is, the market sells off, the dollar gets stronger, and we worry more about exports, right?
Yeah, I don't know. I think the biggest problem with exports, of course, is the trade war. It's not really much about the dollar right now. And part of the problem is that the third and fourth biggest economies in the world contracted in Q3. The Japanese economy contracted in Q3, so did the German economy. That's worse for U.S. exports than the small tick up in the dollar here. But I think the safe haven rule is kind of important. Stock market's bouncing back today. Dollar's a bit softer.
One of the worst routes in oil in a while, Kilduff. And if we knew, like a year from now, if we knew what we know then now, we'd know more about the supply versus demand dynamic. I really wish I knew it was all supply, because if it is, we were just talking about with recessions and Kudlow and everything else, if we knew there was a big slowdown coming, it would explain why oil fell off a cliff. If it's just supply and making, staying allies with Saudi Arabia, and they owe us now because we're not doing anything in terms of sanctions against
Do they owe us now?
Don't you think?
I'd say so.
Well, how does that work?
They don't
cut production. Yeah.
Right.
They don't. But they were getting rather perturbed about the Iran sanctions waivers,
right,
which they came to the rescue of by putting more oil on the market. They and the Russians, in particular. And then the constant push now against, or that what was becoming the push on Mohammed bin Salman, was not sitting well with them. And they were firing up or readying a production cut of upwards of 1.5 million barrels a day at the next OPEC meeting in a couple of weeks. Looks like they're going to be backing off on that. Our relationship with them appears to be bought and paid for now. And the oil market's MVP, President Trump, is helping to keep a lid on prices. We have tripped into an oversupplied market once again because of what the Russians and Saudis did.
You don't think it's anything to do with a global slowdown or fears of a global slowdown?
It's part of it, Joe. I mean, these trade wars aren't what they're cracked up to be.
It's not 50-50 supply demand. It's probably
I would put the global economic slowdown as about 30% cause of the sell-off, because again, the supply numbers we know, demand is still strong. We are still pushing on 100 million barrels a day of global demand. The Chinese are doing everything they can to spur their economy, which is energy intensive, fossil fuel intensive. So that should put some support on that side of the ledger under prices. But U.S. production is nearing 12 million barrels a day now. We have soared in terms of production. Our exports are soaring, and you're going to start to hear a lot more about us exporting upwards of 3 to 3.5 million barrels a day next year as more and more pipeline projects and other export facilities come online. So the U.S. has really rocked the boat. I know President Trump noted that we're the largest oil producer in the world in his statement yesterday, and that's accurate.
All right, Scott Nations, I just happened to see Boeing, which that was pretty amazing yesterday. It sort of rallied off its lows by 20 points. But now you got Deere today. Deere missed. I don't know whether that's tariff related or growth related or what. But what do you think as the day goes on? We're up triple digits this morning. Does the market hold on to those slight gains we're seeing?
I think it all depends on crude oil. I think the equity market has gotten crude oil completely wrong. I would disagree. I think that our equity markets think that what's going on in crude oil is 100% demand, and I think it's 100% supply for all the reasons, particularly the waivers. And if the problem if the economy around the world was really slowing down, we would see that in copper prices, and copper prices haven't fallen like crude oil prices have fallen since July. Copper prices are sideways to slightly higher. And if what was going on around the world was a slowdown, and given what's going on also in our housing market, you would expect copper to fall off a cliff. That's just not what has happened. And I think in the equity markets here, it's all about this unending tariff battle. If you look at stocks that really shouldn't be affected by the tariff battle, like financials, XLF is unchanged over the past 52 weeks, pretty much what the stock market has done. Something like...
Oh, go ahead.
Go ahead, Becky.
Well, Scott, I hear what you're saying. I just wonder if if I'd listened to the copper market over all of these other markets. I mean, I realize there are a lot of cross currents, but when you start hearing about housing, you start thinking about what Jim Cramer's been saying with the Fed raising rates. I mean, there's a lot of concerning things that you're seeing pop up all over the place. And it's a very difficult time to try and adjust all of this. I heard what Larry Kudlow said yesterday, and that sounded an awful lot like what we heard from the big bank CEOs when they reported earnings. It's just, there's not one thing that I look at and say, okay, this makes me feel really good about everything because I can trust this market over all the other signs that I see.
Well, I'm not saying that copper makes me feel good. What it says to me is that the problem is not global growth as expressed by the price of crude oil. And so, for example, just healthcare. Healthcare is up 10% over the last 52 weeks.
All right, I want to ask Chandler one more thing. Let's just not focus on the dollar for a second. What are you seeing? Are you seeing anything about the pound and what it means for Brexit or Italy and what's happening? And I mean, can you tell anything from the individual currencies over there about what to expect for some of these other hot spots?
Yeah, no, I do say that there's a lot of uncertainty. There's a lot of stories that haven't really completed the story yet. They're sort of in the middle of them.
China,
Brexit
yuan. I mean,
China, the trade tensions, all this I think leads higher volatility. Higher volatility in the stock market means lower prices. Volatility in the currency markets typically is associated with large moves, large swings like we're seeing.
What's your best? Do you have a trade? What's my, if I were allowed to do it, or if I call the Cayman Islands, what's your best trade?
I'm still a dollar bull. I still think the Fed's going to be raising interest rates 2 or 3 times before the middle of next year.
And the ECB is not going to catch up.
ECB can't catch up. No one else can catch up.
What do you think of Bitcoin? What does that say about where we are? Does it say anything, or is this a completely...
I think it's embarrassing to talk about Bitcoin when we talk about the major currencies.
Talk about currencies,
But
I know, not for Andrew.
I do think, though, that it really reflects the speculative. There's so much money circulating. And so people have gone from the Bitcoin's cyber currency craze to the pot craze. And I think we are just searching for places to put our savings that we feel more comfortable.